Good afternoon, ladies and gentlemen. Thank you, Olivia, for the introduction, and to yourself and KC Research to invite me to be here today and talk about the nuclear and uranium industries about 10, 11 months post-Fukushima. And where I'd like to start this presentation, and many of you know this, I don't want to remind you of something that was a bit of a painful experience for all of us last year involved in the sector. But as you all know, last year turned out to be an incredibly challenging year, to say the least, for uranium and nuclear power industries. But I honestly can't think of a single commodity. I cannot think of a single commodity today that has the supply-demand fundamentals that uranium has, and yet had this black swan event occur last year that completely derailed the development of the sector from a standpoint of mine construction, mine development, and from a standpoint of just recognizing the fact that we deal with a much bigger issue in the world today than what happened at Fukushima. And the bigger problem that we deal with in the world today, I'm trying to maybe perhaps get across by looking at this chart here. What this chart shows is back in 1980, what the worldwide electricity consumption was. And over the last 3 decades, from 1980 to now, demand for electricity worldwide has tripled. And based on estimates by International Energy Agency, demand for electricity is expected to double over the next 20 years. Now, what we need to keep in mind is this. Even though many of us here in the West and in the Western world have become so accustomed to the concept of base load power, we almost take it to be a constitutional right to have the lights on all the time, than the fact that it could be a luxury. We forget that almost 1.5 billion people, or 20% of the world's population today, is without electricity. And so despite the challenges of last year at Fukushima, the bigger problem facing governments and policymakers in the world is how do we expand the world's power base, and how does each country expand its energy mix in a way that they have security of supply with their power generation and have sources of energy creation that is clean, emission-free, and reliable. And for all of these reasons, nuclear still remains part of the energy mix in a way where we see real growth, real meaningful growth in the next 20 years for nuclear power. And this next slide here allows me to highlight a few numbers. The numbers are this. Before Fukushima, there were 443 reactors operating worldwide. 443. Today, there are 435 reactors operating. So you can see that's a very small decrease in the number of reactors operating worldwide. Nuclear power is still generating about 17% of worldwide electricity. And what you see on this graph is a breakdown of nuclear capacity based on different areas or parts or continents of the world. The blue and green really representing the Western world, and the area in orange representing Asia and emerging economies. And so when we look at this equation, it's quite clear that the growth in nuclear power over the next 20 years is coming from the economies that are expanding most rapidly. Places that need to basically see the needs of the middle class and basically the urbanization themes of their middle classes. This needs power. And so that's why today, of the 62 reactors under construction in the world, half of them are in China. And that's why when we look at this chart and we see the expansion of nuclear capacity over the next 20 years, it's no surprise that the orange color representing Asia is predominantly where the growth is. Yet last year, many of us heard a lot in the news about countries like Germany or Switzerland that have talked about basically phasing out their nuclear reactors over the next 10 or 15 years to come. The reality is by 2030, Germany and Switzerland's nuclear capacity represents maybe 3% of global nuclear capacity. It's irrelevant. And so we have to consider this in a more complete picture. And in this next slide allows us to really focus on China. China has an incredibly unique and ambitious nuclear program right now. And what is different about China's program, different to, let's say, how the Western world, US and France, developed their nuclear capacity over the last 30 years, is that China nuclear business is a government business. In the West, we have basically the private sector that was responsible for developing nuclear power plants. This meant that it took longer to permit, and perhaps it would have been more challenging to finance development of reactors. In China, one company, China National Nuclear Corp, is responsible for expanding the country's nuclear capacity, and it's a government-backed initiative. And they're talking over the next 20 years about adding over 100 operating nuclear reactors in China. That's from currently 11. So you think about that. China today has 11 operating nuclear reactors, and it plans to have over 100 by 2030. Just last week, China's Prime Minister in Abu Dhabi at the Future Energy Summit reiterated China's plans and the need for them to build nuclear capacity simply because of the fact that so many people on an annual basis are dying in China because of the toxins that are emitted in the environment by these coal-fired power plants. And the reality is that we simply can't rely entirely on fossil fuel-based sources of power generation to meet our energy needs. We do need to diversify, and the only thing that is keeping nuclear power in the energy mix in China and other places is the simple fact that it is the only type of power generation. It is the only type of power generation in the world that is large-scale, reliable, low-cost, and emission-free. Those qualities are unparalleled in terms of any other source of power generation being able to share those qualities, and there's simply no credible alternative to that. And again, it's because of that that you see Post-Fukushima, an oil-rich country like Saudi Arabia, announced plans to build 16 nuclear reactors. This is a $400 billion program that the Saudis have announced. You look at the plans in India, the fact that it's announced plans to build 19 new reactors. Even in the UK, a G7 country, there's plans to build 8 new reactors. Brazil, and even in the United States, where there are plans for building new reactors, government loan guarantees for supporting the development of nuclear reactors. These are important macro points to highlight. So what does that mean for demand for uranium? I mean, clearly the main driver of demand for uranium is its use as a fuel in nuclear reactors. And what this chart shows is where we are in terms of demand for uranium right now in 2011, the small bar that you see on the left-hand side, and where demand is projected to grow in line with increasing world capacity for nuclear power. And over the next 20 years, we're looking almost at a doubling of demand for uranium in line with the growth in nuclear capacity. Current demand for uranium being about 180 million pounds per year, and expected to rise to about 280 million pounds per year by 2030. And the biggest story here, the biggest reason why we need to look at new mine construction and new uranium mining as a way of bringing new supply online is the fact that we've relied so heavily for 20 years on secondary supplies. Secondary supplies basically being government military inventories of uranium dating back to the Cold War days. You've probably heard of the megatons to megawatts program, the program to dismantle retired Russian warheads and take that uranium and use it for power generation. Under an old treaty between US and Russia, the HEU Treaty, we've been dismantling almost 25,000 missiles, providing about 20% of the supply into the uranium market since 1994, and this deal is set to expire next year. This is a major source of secondary supply that simply won't be there anymore beyond 2013. And what does it mean for the price of uranium? Price of uranium going back to 2004 has been quite volatile. You see this chart that shows two prices, the spot price of uranium, which is the dark blue color, and the long-term price for uranium, which is the light blue color. Back in 2004, uranium was trading at around $15 per pound. In the 90s, uranium was trading at around $10 per pound. From 2005 until the summer of 2007, we saw a dramatic rise in the uranium price from $15 per pound to almost $140 per pound. And thereafter, you had the financial crisis and a number of other events that really brought that upward move down. And we had $40 uranium for 2008, 2009, and most of 2010. It almost felt unconstitutional for the price of uranium to go above 40. It just felt like it was so range-bound. But all of a sudden, in late 2010 and before Fukushima, prices were heading back up again because of the supply deficit issues that we have, because of the shortage of uranium. Price was at $75 per pound, and then post-Fukushima, it's back down around $50 to $55 per pound. Now, here's one important data point to remember from this presentation. It's very important that the price of uranium post-Fukushima found a very stable base at $50 to $55 per pound. It could have easily, in a worst-case scenario like Fukushima was, crashed all the way back down to $40 or maybe even lower $40 per pound. The fact that it didn't, the fact that at $50 per pound, producers like Rio Tinto and Cameco are buying uranium, demonstrates the supply tightness that we have in the market. Now, hold those thoughts. So just keep in mind, spot price currently is at $52 per pound. Long-term price, where 85% of all contracts are done, is at $63 per pound. So the long-term price being, let's say, the forward curve, tells us that the prices are even higher than where the spot price suggests it is. Here's the next important point or data point to remember from this presentation. Worldwide demand for uranium last year, even post-Fukushima, was about 180 million pounds per year. Mine production was 135 million pounds. Again, these are last year's numbers, these are annual numbers, and these are post-Fukushima numbers. 180 million pounds of demand versus 135 million pounds of mine production. Again, that gap of approximately 45 million pounds is coming from finite secondary supplies that we've lived off for 20 years. Keep this point in mind. We have had a supply imbalance in the uranium business for 20 years. Not just last year or the year before that, for 20 years. 50% of supply comes from 4 mines. We really haven't built new uranium mines in a very long time in the West. What this graph shows is the top line representing demand, where demand is and where demand is going, that we already talked about. And what it shows here, what it shows in blue is where you have mine production from Western mines, or mines basically outside of Kazakhstan, and in gray, all the uranium mining that's happening in Kazakhstan, and in green, secondary supplies. And I'll talk about the importance of Kazakhstan, but the key thing is you see a gap. And how do we fill this gap? The only way we're going to fill this gap is by being able to build new uranium mines. What does it take to build new uranium mines? Most of the mines in the world at a development or construction stage are conventional open pit underground mines. Just last week, JP Morgan put out a report examining the 20 largest uranium projects in the world and what the incentive price is needed to see these projects get constructed. Based on last week's report, the industry needs $80 per pound uranium as an incentive price to see the development of the world's 20 largest projects proceed. Again, we're at $50 right now and $63 long-term price. At these prices, you're not seeing projects get financed or built or turned around. $80 is the incentive price as of last week. Late last year, there were papers and studies done in the industry that showed $85 to $90 as the incentive price to see mine construction. And in the absence of these higher prices, the only type of mining that we have seen come online has been solution mining operations, or ISR projects. In fact, 85% of all the new production over the last decade has been ISR production. The pictures that you see at the bottom, the picture on the left here is an open pit, a conventional mining uranium operation. The picture on the right there is a picture of a solution mining operation. For selfish purposes, that picture is the picture of my company's solution mining operation in South Texas, but we won't get into that right now. But Kazakhstan is a key part of this equation. Again, this must be maybe the third information bit that I'm going to give you that you should remember here. Over the last decade, 85% of the total production increase in the world came from Kazakhstan. 85%. We didn't build any new uranium mines in the Western world. And all those projects coming online from Kazakhstan were solution mining operations. In the last 10 years, the average uranium price realized was about $30 per pound. At $30 per pound or $50 per pound, we're simply not seeing big conventional projects get built. Solution mines are being built, but the problem with solution mines is that they're only about 20% of the world's reserves in certain geologic settings where you can implement solution mining operation. So let's move towards maybe some activity last year that to some extent might help confirm why I'm so bullish on the uranium price. Last year, despite what happened in Japan and at Fukushima, despite the challenge that the nuclear and uranium industries had, we had one of the most active years from an M&A activity point of view in the uranium sector. You had the development with the Chinese looking at taking a run at extract resources in Kalahari and the deposit that they have in Namibia. You had Russia's state-run uranium mining company, ARMS, spend over $1 billion in capital acquiring Mantra resources. You had late last year the bidding war that took place over Hathor exploration between Cameco and Rio Tinto. When you look at this, when you consider the fact that the capital markets and the stock market completely wiped over 50% of equity market value from all publicly listed uranium stocks post-Fukushima last year, the real smart money, the big companies that are meant to be there as the long-term suppliers of uranium, what did they spend their time doing last year? Buying companies and buying projects. And we saw one of the most active years in the uranium sector from an M&A perspective. At a time when, again, 50% of market value was wiped from the capitalization of publicly listed uranium stocks. This is the last slide, and I want to just summarize some key points. This slide is my sort of, let's wrap it up slide, right? There's a few bullet points here. But I just want to kind of share something with you. If I gave this presentation here a year ago before Fukushima, I would have given you 3 reasons to be extremely bullish on why uranium prices are going to go higher and why uranium sector is got incredibly strong fundamentals. Those 3 reasons would have been that the emerging economy, not Germany, not Switzerland, the emerging economy led by China is going to nearly double world nuclear capacity over the next 20 years. I would have highlighted the fact that we have a significant supply imbalance versus current reactor requirements. And I would have highlighted the fact that by 2013, the HEU agreement between US and Russia expires, which takes 20% of supply out of the market that only mining can replace. 12 months later, or today, post-Fukushima, the top 3 reasons I would give you for why I'm bullish on uranium are the exact same 3 reasons as before. The emerging economy is still going to nearly double nuclear capacity over the next 20 years. We have a supply imbalance versus current reactor requirements, and the HEU Treaty expires next year. My gosh, in 2006, we all got excited and drove the price of uranium to $150 a pound, and 2013 was 7 years away in 2006. Today, 2013 is next year, and we're going to see a major supply crunch in the market, yet we're focused on events that are really irrelevant to the future developments of this sector. Last but not least, remember, uranium is a depleting commodity. We don't have worldwide inventories of uranium. There are no LME inventories of uranium. Every pound of uranium mined is consumed. A reactor can't wake up tomorrow and say, geez, we're out of uranium, let's put some zinc in this nuclear reactor. It doesn't have a replacement. And it makes up an incredibly small percentage of the cost to generate electricity by nuclear power, less than 3%. the end user is not price sensitive. It doesn't matter if they pay $100 a pound or $200 per pound, as long as they have it, because they can't put zinc in a nuclear reactor. So, to wrap it up, I think pay attention to the fact that the big names, the Cameco's, the Rio Tintos, the Chinese, the Russians, were active buying uranium projects last year. Pay attention to the fact that we have a supply imbalance even today, and we've had a supply imbalance over the last 20 years, and that we need at least $80 to $90 per pound uranium as a price that's going to stimulate interest in new mine construction worldwide to help meet the supply imbalance that we have and to meet growing demand in the years to come. I hope that this turns out to be for all of us, and those of you that have been patient investors in the uranium sector last year, which was a tough year, this should be hopefully a comeback year and a very strong year for the sector. I appreciate your patience, I appreciate your time, and I appreciate your support for those of you that know and follow our company, Uranium Energy Corp. And thanks again to Olivia and KC Research.